Welcome back, guys, to your favorite place to be. We wanted to go ahead and jump in here and catch you up on everything that's happening with the markets. There is a lot of stuff going on, so I wanted to kind of reach out and let everybody know. We are following this stuff very closely. We have been really diving in and trying to give you guys a cutting edge on the YouTube world for basically everything that is on the move. We've seen it happen today, guys. We went yesterday, and need to go back and watch the video. We did a complete summary of the 17-page report released by the Fed yesterday. So I definitely recommend going back and watching that. And then today starts the new day where we're seeing bond yields rise into the evening. We saw the VIX spike, and now it has retreated into the evening. And we've also seen a sell-off in gold, which we are looking at people trying to hedge their losses on their margin because they're getting margin calls and they have to sell off their gold to cover those margin calls. And we're going to go through all of that today to kind of break it down for you so you have a clear understanding of where the markets are going. So I'm kind of waiting a little bit later in the day, guys, to go on the live stream for a number of reasons. I did see the VIX climb up earlier today, right? We saw the VIX kind of like climb up, and then we saw it retreat down, which was, in times like this with high volatility, guys, there is movement happening that we have to understand, guys. We have to understand why this, why the VIX has given us a false sense of calm. With gold falling, bonds on the rise, the S&P trying to hold on. This is a classic bearish divergence. So stocks are trying to survive by killing real assets, gold. This final level wall, if it breaks, we could definitely go lower. And we also were covering yesterday too, guys, was the inflation report, right? It came in high at 2.7, so there's absolutely no room for cutting any rates. If we cut rates, then basically we're going right back into the hyperinflation environment that we were experiencing during the COVID money printing up till today, and we have to start understanding this inflation being more of a structural thing built into our economy. We are looking at this stuff on a macro level here on the channel, and we're going to look at everything. So if you guys have got time, I definitely recommend you guys throw it in the chat to either back up what we're saying and try to give you guys an edge on what is going on. So let's just jump into it where we were today first off before we jump into potentially where we're going. We saw a sell-off today in real assets. We saw a considerable sell-off in gold, right? And now gold is ticking up here on the 24-hour because obviously this thing resets. But we saw a pretty good sell-off in gold today. It went down to about 6%. And this is kind of, like I said, this is a classic bearish divergence, guys, because what is happening is we are seeing a sell-off in real assets because the interest rate, the federal funds rate is not going to be changed. All right, and a lot of people say, well, we're good. The bond market, the 10-year Treasury bond is going to, it's going to kind of stay the same too. That is not entirely accurate, guys, because if we start seeing a pickup in inflation, then we can absolutely guarantee, just like in 2016, we can guarantee that the yield is going to, we are going to basically start seeing something that is not the typical norm, right? It's not going to be the typical norm. We are going to start seeing a rise, guys. We're going to start seeing a rise. And what that is going to do, guys, is that's going to put pressure on other real assets like the real estate market, right? We're going to start seeing, that treasury bonds start interacting with those markets. Obviously, I'm in the real estate business, guys, and I see it firsthand. The buyer pools are a lot smaller than normal. So, with this being potentially the 10-year Treasury, which directly affects mortgage rates, that's going to put additional pressure on the housing market, and that is going to be another real asset that people start unwinding at lower prices, similar to what we've seen today, guys. So we're also jumping into another very important thing, is the S&P coming down here. So right, we talked about it yesterday about the unwinding, that potentially unwinding liquidity. They are unwinding their positions, and this is taking place in real time. We are seeing companies on the S&P that are not going to be able to service their debt with money being this expensive. If we have interest rates where we're currently at, 3.75, no guarantees we're going lower. Probably going to have to go higher if the inflation goes past the 2.7, which was already higher than what they predicted at the 2.4%. That is going to cause the Fed to step in to try to control that inflation. And if rates go higher, it's going to be putting more pressure on companies, especially on the S&P, that are already struggling to service their debt. All right. And the first thing that's going to come along with that, that's kind of a double-edged sword, is layoffs, guys. And we've already seen a 4.4% unemployment rate. If that goes higher, they're going to have to stimulate the economy. They are going to have to turn the money printer back on, and that is ultimately going to drive inflation much higher, even though the inflation rate is already running higher than we originally anticipated into where we're currently at. So let me jump into the live here, see if anybody's here. These are pretty critical things that are happening in the U.S. economy and around the world. And we are also looking at not just in the U.S. economy, guys. We are looking around the world here today. So just to be clear here, we're not focused on just one thing. Europe took a hit today as well. Several markets over there. We're going to give you a preview here, digesting some of this stuff. So 17 countries here on this one. We got France. We got Italy. We got Germany. We got them all, guys. We got the UK. They're all down, and they're all down relatively the same amount. Let's pop over here to Asia, give you an idea what's going on. Now, the Nike key was hitting a higher high yesterday, I believe. It's edged down a pretty considerable amount. We know where the rates are over there. They're incredibly low. And then, the same kind of broadly. So we're getting a very broad world sell-off. It's not just happening here. There is really nowhere to run here, which is pretty important. We got to understand too, because there's nowhere. See, guys, the market makers, they have to fuel where the new growth is going to happen, right? What's going on, Mr. Full, Jolly, Crypto Rico? What's going on? Appreciate you guys coming in from Oklahoma here. So yeah, we're kind of tying this all back into where we're going here. And like I said, gold prices sell off today, real asset sell off. S&P dropping, bearish divergence all around the board. We were also talking about the 10-year Treasury bonds. Let's jump over there to that, because that's just as important, guys. Because if we get inflation, if inflation picks up, that is going to affect the bond market. That is going to incredibly affect the bond market. And we got to keep that in the back of our head, because that 10-year Treasury bill, that 10-year Treasury bond, that is going to affect interest rates on people getting a 30-year mortgage. All right, so that is another real-world asset that could come tying into this this strategy that we're devising. That there is going to be some type of cyclical rotation of capital, potentially into these finite supply cryptocurrencies. And I know people might leave the chat right now, but that is the absolute truth, because there is nowhere to run here. All right, the S&P is going down, gold's going down, interest, the yield on the 10-year Treasury is going up. So the bond market is potentially going to price in higher inflation if we start getting more inflation, which is, in that point, the Fed's going to step in and actually potentially raise the rates. Or in periods of high inflation, guys, that yield on those 10-year Treasury bonds can still go up. All right, I want to be very clear on that. That could still affect, that could still come into play, even if we just keep the interest rates. If the federal funds rate stays the same, like they're anticipating, really, damn near till 2028. We did the entire review of the 17-page report yesterday, including the dot plot. Go back and watch it if you haven't seen it. It'll catch you up to where we're at now. that is still going to, by definition, affect the 10-year Treasury bond, which then is going to trickle down into the U.S. economy. It is going to put more pressure on the housing market. It is going to potentially cause the companies that are already on the S&P that are running into financial walls. They're not able to service their debt. They're having to increase layoffs, which is going to drive the unemployment rate higher than the 4.4%. If the interest rates continue to stay high, like they are high in this environment, we have to apply this idea that inflation is just going to be structurally built into this market. The Fed has literally, after yesterday, people are losing confidence. Investors are unwinding gold positions to cover their margin on the S&P losses, so that doesn't become out of control too. We're on a very thin line here because we're seeing a world sell-off. There is literally nowhere to go today. And we also were looking at the VIX earlier, and the VIX, like I said, it popped up today this morning. I think it was up 8% this morning, and it has retreated all the way down into the evening to basically, to only say that the VIX is basically a liar. The calm is just a trap, guys. They're trying to trap liquidity, and don't be fooled by the low VIX. Real assets are bleeding out. We are seeing, like I said, if you guys are just coming into the chat, we are seeing gold selling off. We are seeing margin calls. We are seeing gold falling as high as 6% today, and they're selling the safe haven asset to save the margins in the S&P 500. So if we do continue to see this sell-off accelerate, we are going to have to figure out exactly where the market makers are going to put in where they are going to put in their new capital that's sitting on the sidelines, especially if they're unwinding some of this in the gold. We all know that gold has been experiencing incredible growth recently, and we know the bond market is smart money. If the yields rises, the bond prices are falling. We know all that. And we also can be fair here, and we can say that, ladies and gentlemen, the bond market does not lie. All right. Yesterday, the Fed projected an inflation rate at 2.7%. That's up from the 2.4%, and today's bonds are punishing the S&P for that. The 10-year Treasury yield, it rose into the afternoon. It went from, I think, somewhere around the 4.2 range. It's now, where are we sitting at here? Where are we sitting at here on the bond market? 10-year Treasury bond. Yep, we are up here. We started out lower. Look at that. There we go. There it is right there, guys. Right there. So it's all priced in, guys. This is literally all priced in. I mean, this was the drop right here. Yield drops, and then we increase, right? It's happening right there for you in real time, ladies and gentlemen. What's going on? Yeah, we're gonna get you out of here. Goodbye. We'll put you in timeout for 24 hours. If you're gonna keep making additional accounts to come down here and try to throw the chat off where we're going, we're just gonna ban you. You got to go find something other than do. We're not gonna have trolls come into the chat and basically create additional accounts just so they can harass the chat and throw it off topic. If you create another account, I'll ban you as well. So we will be tying that back in, though, FYI. Even though you're banned, we will be going back into the Zcash narrative, probably into the evening. I also want to go ahead and tell you guys too, kind of as a preview. We got another video. I'm going to be doing another video later. I'm going to be publishing another video later. Maybe we'll have it come out tomorrow. There was mass liquidation longs at 72 Bitcoin. I was looking at the heat maps this morning. We saw massive liquidations in the crypto market, the derivatives market, and we are going to cover exactly why we think that the crypto markets could be a safe haven here and maybe pull from that massive world market. Around all these markets that are selling off, people are going to want to figure out where to go with their dollars, right? They are going to want to figure out a safe place to go for those dollars and we're going to be making a video about that, about how we think some of this stuff is going to cycle back around into some of these finite supply cryptocurrencies, and maybe keep an eye out for that coming in. So yeah, drop it in the comments, guys. If you're live, we are live here on the channel, and we are giving you guys this information kind of as it comes in. So it's very volatile, guys. This VIX. Don't look at the VIX today. It is completely lying to you. It's basically, you know, it's the market makers are perceiving as everything is calm, guys. But this massive sell-off we had in gold and silver today only guarantees us, you know, what is going on. As far as other stuff going on, drop it in the comments, guys, and let me know. We are live here. We're going to be taking comments and curiosities if you guys have time. You know, we also could talk more about the divergence in the VIX, which fell at close, which I believe here on the channel that is a trap. It's basically institutional distribution. Large investors are gradually selling to retail while keeping the volatility low so they don't scare the herd, right? They're unwinding those massive gold positions from the run-up we had in gold and silver. They cannot dump all at once because even though gold, I believe it's the third most traded future, I think, contract. I think it's oil. It's either natural gas or gold. I can't remember. But basically, you know, they can't unwind all these gold positions at once, okay? They have to do it based on when there is ability to kind of get away with it, right? That's kind of what they're doing. The base, so let's see what else we got here. Let's jump over here also. I wanted to pull up for you. Wanted to pull up something here. Let's pull up gold real quick here. I had it. I mean, look at this sell-off, guys. I mean, it's a pretty big wick down. I would say it's like almost the size and magnitude if you go back a couple days where we've had this sell-off kind of accelerate. We are almost looking at where it peaked. You know, this sell-off, these candles, these red candlesticks definitely represent, you know, here was kind of just overpriced and speculation right here. Obviously, this was speculators that were, you know, buying way too high. And this one right here is kind of more of an unwind, right? This is kind of more of an unwinding positions. And, you know, these positions here are unwinding slow. So we also can understand that they can't unwind all the positions at once. If we spike up here, that unwinding is going to happen probably, you know, we could keep seeing an unwind in gold. We could also see kind of a cycle back into cryptocurrencies and gold to kind of give us this false hope that we're breaking out on gold. And then basically gold continues to retract. And then basically, you know, we can kind of determine from that this was basically just an unwind of the positions after market makers basically, you know, they went into gold pretty heavily. They were already in gold. So basically what that did was it created an environment where it's mostly whales that are pumping the price of gold. The retail traders are actually coming in up here. They're coming in up here a lot higher. They weren't buying gold down here. I mean, of course, some were, right? I mean, there's people in the chat here that were buying gold all the way back down, you know, way down here, back here. There's people in the chat here, guys, that were buying gold back in 2001. You know, so it's anytime you have a graph here, guys, that looks like this, just FYI, this is coming down. Okay, this is going to come down. I'm not saying that it's going to crash and go all the way down here. We're not going back, I don't think, to $1,800 per gold, per ounce of gold, but you know, we're going to stabilize with this kind of this route right here. I think we're going to be maybe back into the range of say 2,000 to 3,000 US dollars per ounce of gold, and you know that's kind of more in line with this this is just out of whack. This is going to be pulled back down. This is, you know, and like I said, institutions and large whales cannot offload this all at once. But it will, you will look back at this, guys. We are not going to see gold, you know, continue to rally. I mean, it could go higher. I mean, maybe we could go even maybe back up to fives, maybe even 6,000 per ounce. But this is going to, anytime you have a graph that looks like this, something interacts with this system, something interacts with this market, and it's going to pull that graph back down to kind of realign here with a traditional moving average, that makes a little bit sense. I would say maybe the more realistic price in gold here is probably maybe in the mid threes, 3,200, 3,500, and it's going to kind of run in maybe with this higher high right here back in 2011, and then maybe kind of flatten out a bit. But we're not going to just see a parabolic jump in gold all the way to something crazy like $8,000 an ounce. I don't see that happening. I mean, it would have to be a very weird circumstance for that to happening. We'd pretty much have to have market makers come out of equities and basically any holdings they have in stocks or any kind of any type of thing to press gold to those kind of levels. And I mean, could it happen? Maybe, maybe we can go up to 7,000, 8,000 per ounce in the next year, but I don't see it. I think we're going to see kind of a rebalance of people's portfolios. We're going to see people rotate some of this capital into crypto assets that are having cap supplies, that are going through scarcity mechanisms, that are going to create massive run-ups in some of these coins that we've talked about here on the channel. We were talking about this the other day too, guys, by the way, this capital rotation into crypto. And, it's pretty remarkable. Let's jump into something else here. Let's go back in here to the S&P. Like I said, guys, if you are live, we are live here on the channel. So feel free to drop your feedback. Feel free to let us know what you're thinking about some of the stuff we're talking about here on the channel, because obviously without you guys we don't really have a channel, so that's kind of the main thing. And we do kind of follow the feedback, and we try to kind of gauge what you guys are saying, because in the chat here, that's the stuff that we want to follow. We want to follow where the market makers are coming. And I know people here watching the channel, and I know you guys are out there watching the channel, and you got large positions open, right? You got large positions in oil. You got oil futures. A lot of us here on the channel, we don't even have the ability to open up positions worth anything. We're caught using the gold ETFs, and basically, past that, there's not really a way for us to open up massive positions in gold. But we know people here on the channel. We don't all come from humble beginnings. We know there's people here on the channel that are more than capable of opening up massive positions in gold. They're doing that. They're watching the oil prices. They're potentially going into short oil. They are thinking about shorting oil because they've made so much on it already. They can literally reverse the play down. They can start shorting oil ETFs. They can start shorting oil, and basically, at that point, the money keeps cycling around. It's got to go somewhere, guys. We know that the money has got to go somewhere, and we do believe here on the channel that there is going to be some type of super cycle play out in the broader crypto community. Based on some of the fact that these coins are so small, right? We only have, less than $1 billion market cap on anything you go past the top 75 coins, right? So we know that there's some kind of opportunity there. We have to play into this opportunity simply because if we don't, we're basically saying that the money printer has to stay on. It has to stay on, and it's going to artificially pump the S&P. Which could happen, but my question to you guys is, do you think that could happen under the circumstance that inflation projections have already rose? What if those inflation projections keep rising? That means that obviously the Fed's going to have to step in and start raising rates, which is basically going to crash a lot of the stocks on the S&P, simply because those companies are going to run into problems with servicing their debt. They are going to run into problems with servicing their debt. It's going to cause stress on the regional banks. That is going to affect real estate. That is going to affect commercial lending. The companies the real estate companies are not going to be able to remortgage their commercial debt on properties or whatever they're financing, because it's going to be too expensive, and it's going to trickle down into the overall economy. We're going to see commercial real estate unwind. We're going to see banks, potentially regional bank failures again, like Silicon Bank, and all these bank failures could resume, because that's kind of the idea here, right? The institution banks, the Chase, the JP Morgans, they're not as affected by this. But once the retail banks or the regional banks start, if those rates go on, there's nowhere for the rates to go. The federal funds rate has got to stay steady, guys. Okay, and we have to absorb this idea of inflation structurally within our portfolios. That's the only way we're going to be able to position ourselves for success, guys. That is exactly why. And like I said, if you're just tuning in here, I wanted to go ahead and tell you guys, I know you guys, I mentioned it earlier, we're going to be dropping a couple videos over the next couple days. I want to get one video out because I do think we're going to get either a recovery rally in crypto, something. The market's got to pull from some direction, guys. So either market makers are going to go back into the S&P from their positions in gold. I think smart money is shorting gold right now, and the S&P inches to new highs. We see crypto break out, right? We see cryptocurrencies potentially break out, and then we also see the S&P maybe run sideways a little bit. Traditionally, Bitcoin, the broader crypto community, has followed the S&P pretty nicely, but we're looking at potentially the bond yields rising as well, right? We can't rule that out. We can't rule out because we know where the money's at, guys. It's in the bond market, all right? It's not in fucking crypto, all right? The real money is not in crypto. Crypto is a small sliver of a couple percentage points of the overall market. It's a fraction of the overall world market. The Euronext, the Nike key, the S&P, the Nasdaq, the NYSE. It's a fraction of all those markets. But we also know that that's where the growth could happen. We also know that with our portfolio size, we are trying to magnify growth. And if we're trying to buy the Apple stock of the week, yeah, in Nvidia stock. Well, I mean Nvidia, no, but some of these stocks, we're going to be waiting decades for us to experience the type gains that we need to get. Right? It's pretty obvious. So, should we call to action anything, guys? Drop it in the comments and let us know. Let's take a look at oil. We haven't looked at oil that much here on the channel. We've been talking about oil a lot, but we haven't really looked at it too much. So let's pull up oil and let's see if people are shorting oil. I don't know. What do you guys think? Do you think smart money is shorting oil right now, or do you think they're pricing in higher highs? Drop it in the comments and let me know right now. Right now, guys, the chat is yours. Drop it in the comments. Do you think smart money is shorting oil, or do you think they are betting crude oil, to go higher? I want to know in the chat, guys. I want to know what you guys are thinking. You tell me. You tell me, guys. We're going to jump into it. I'm waiting for the answer, guys. I'm going to wait. I'm not going to go any further until we get the answer. I want to know, do you think smart money is shorting oil right now? Or do you think they are pressing oil higher? Let me know, guys. Drop it in the comments. I want to know right now. Drop it in the comments. Do you think oil is being shorted by smart money? Do you think they're starting to short oil? Or do you think they are putting it higher? Should we look at the contract? Should we look at an ETF? What do you think, guys? What do you think is going on? Do you think they're shorting oil now? I think they are, guys. I think they are shorting oil. Let's check it out. Let's look at crude. And look at this run up, guys. This is a massive, massive run up here in oil. We all know why. You guys are watching the channel. You guys know why oil is going up. But are they shorting it? Do you think we're going to get a candlestick here? Do you think more profit taking is going to come from market makers that are shorting oil? It could be the same thing with gold, guys. We could look at crude oil right now in this moment, and we could look back a month from now. We could look back and we're like, wow, they're shorting gold, right? Let's zoom out here. It looks all bullish right here. Let's zoom back out. See, guys, the market makers, they made money on the run up on gold, right? They made money on the run up on gold. Large positions are being unwinded. They are being unloaded onto the retail investor that is holding gold, the hope that gold is going to go higher. Now we might get a a false recovery here, right? We might see market makers push gold a little higher, thinking, so the retail traders think some type of recovery rally is coming, similar to what we had in crypto, and then they could crush the price of gold. They could literally short gold. They're going to sell it. They're going to pocket the difference, guys. That's exactly what could happen. Let's take a peek over here at crude oil. So crude oil could be going through the same thing. You know, we've been getting news articles left and right about Trump stepping in to fix the problem, right? He's coming to save the day again. And what is going to happen? They are going to make money all the way down, shorting crude, right? Let's take a peek at, let's look at some more stuff here. Let's look at, we looked at crypto. We hadn't really looked at crypto. Let's save crypto for a little bit later, guys. I want to preview you guys to what is coming. I'm going to show you guys the liquidation at 72K, 71K, and where everybody lost their long position. We looked at precious metals here, right? It's not up. If you guys are not paying attention to the markets, it is not up. It's about 5% down today on gold. Silver fell even more. Let's look here. Should we look at natural gas? I don't know. What do you think? I don't know. So, what do you guys think, guys? Nobody's answered the question. Are you guys looking at it? I think they were betting oil to 200. Oh, shit, man. Oh, yeah, if we go that high, guys, it's going to get really scary here, all right? Because that's going to put more pressure on, that is going to put more pressure on the Fed, guys, because the Fed is looking at this Iran war, and they are trying, they're in a very tough spot. We covered it yesterday. Like I said, we covered it yesterday. We did the entire Fed, we summarized the entire 17-page PDF release from the Fed. We covered it. Go back and watch it if you haven't seen it. That way you guys are all caught up here on the same page. You know, are we going for an all-time high on oil? Are we going to see oil? We're going to see oil futures continue to rise. Are we going to see oil go to an all-time high? Are we going to see some, I mean, when you think about it, guys, the narrative on the U.S. government and military stepping in is not looking very good. So, I mean, I almost wonder, are we going to all-time highs on crude? Is crude oil going to an all-time high based on the very specific circumstance that are the U.S. military budget, that the debt on the U.S. interest alone is more than the military's budget? Inflation at 2.7%, higher than the projected numbers. Is that going to cause a trickle-down effect in the general economy, right? Are we going to put more pressure on the average American? Are we going to give more pressure to people that are already not servicing their debt? We know credit card debt is at an all-time high. We know all these macro things. We know that the used car market has plummeted, right? We've seen all the macro things play out. The market has to go. The market makers have to push their money to where they see growth. Is that in oil? Is crude going to $200 a barrel? Are we going to see a phenomenon where we hit all-time highs on crude, like Jolly just mentioned in the chat? See crude oil go to $200 per barrel, and then are they going to short it all the way down? It's possible, guys. I mean, I want you to think about this for a minute. In 2001, we were sitting at $19 a barrel. We were sitting at the same spot during COVID when everything crashed before we had the V-shaped recovery. 7 years later, we hit all-time highs, $140 a barrel, probably up much higher. if we zoomed in, per barrel on crude oil. All right. So my question to you guys in the chat, if you guys are just coming in, are we going to all-time highs on crude oil? Are we going to see the U.S. government step in and bring down the price of oil, stabilize it? I'm not saying a crash, but a correction down to 65, 70 per barrel on crude would give market makers they're already unwinding gold. They're unwinding gold so they can cover their margins on the S&P. The S&P companies, a lot of them, guys, are not going to be able to service their debt if we increase the interest rates. They're already in a predicament where they're not being able to service their debt. So my question to you guys, if that is the case, and we cannot give more inflation to the average American, does that mean oil is going to an all-time high? Are we going to get $200 a barrel on oil? Are we going to see market makers start shorting oil now and put capital rotation into some of these alternative markets? I got several sitting above my head, guys. There's only going to be 21 million Bitcoin. There's only going to be 21 million Zcash. Zcash, last I looked, is at 3 billion. Very small numbers. Where is the next bubble going to inflate? Is it going to continue to inflate in oil? Are we going to see a recovery rally in precious metals? Are we going to see market makers push the S&P higher, even though there are only a few companies that are actually showing growth on the entire S&P? There's only a few, guys. Majority of the companies on S&P are running flatlined and no growth. Apple, Nvidia, few AI companies, that's it. If we look at that, guys, and we take that and we analyze the macro market, where does the money go from here? Do we run 200 per barrel, hit an all-time price in oil? Do we see a market crash? Do we see a 1 to 5 year bear market in the S&P, maybe the longest we've ever seen? Is that ludicrous to say in this given moment? That we did the entire Fed report, guys. Like I said, if you're just checking in, go back and watch the entire video. We did a summary report on the entire dot plot. We looked at the projections of all the votes from the Federal Reserve members. They're putting us out to 2028 with a 3.1% federal funds rate. The money is not going to be cheap. They are not suggesting in their report, they are not suggesting in their projections that money is going to be cheap anytime soon. So what we have to understand here is, how are the S&P companies that are already able not to be able to service their debt, how are those companies going to be able to make it? They're going to start laying off. Unemployment's going to rise above 4.4%. Are they going to cut the money printer back on? Is inflation going to run rampant and we're going to structurally build that into our portfolios? That's another potential candidate for what is going on. We might have to structurally present inflation into our portfolios, and that might be exactly the only way we can do so, guys. Because like I said, crude oil, $94 a barrel. We go into all-time highs. We don't know. Gold, people are unwinding positions in gold to cover their margins from the S&P. We're running into a circle, guys. We're running into a circle. So that's going to wrap it up here for me, guys. I got a couple videos coming out if you guys are sticking around. Like I said, I have a few videos coming out showing some of the liquidation heat maps on $72,000, $71,000 Bitcoin. Are people going to unwind crypto positions? We think crypto is, not being talked about, right? Nobody's really focused on crypto. This could be an opportunity to move the needle on crypto a little bit and get into some of these larger positions at some of these smaller market caps. I mean, if you guys got time, we can stick around here for a minute more. I'm going to jump into one little thing here, and we're going to jump into a little bit of crypto preview. Like I said, I know a lot of people they get scared when I start talking about crypto, but I mean, you guys are watching cryptocurrency theory, so we did see a little bit of an uptick over the last little bit of time here. The last 24 hours, we crashed, we went up, we crashed, we went up. We're back here. So let's jump in here real quick here. Let's just give you a market update here, and we'll wrap it up. You guys got any questions, last minute thoughts, guys? What are your thoughts? I mean, I know a lot of people are coming in here. We got quite a few people in the chat. We're literally one of the only people on the internet blowing the whistle here that crude oil could be going to an all-time high, while simultaneously contradicting ourselves and saying that market makers could start they could start shorting crude oil, they can start shorting gold. We can, if you're a retail trader and you don't have any of these, have enough capital to open up massive positions in some of these, you can run over to the ETFs and start shorting those, right? It's possible for anybody on the channel to do any of these style techniques. But let's just check here real quick here. 2.4 trillion. We're still caught at this number. Have you guys noticed that the Bitcoin price and a lot of these coins have gone down, but that number still stays between about 2.3 and 2.7 trillion? It is a phenomenon, guys. I mean, even if you guys aren't in the crypto world, I know we get a lot of people that are a bit older here in the channel. I know I see the analytics. I know you guys are a little bit older than us, but we do kind of reference this stuff that the crypto markets still have a lot of room to go here. I mean, the market caps of this stuff is really small. Once you get past the top 25 coins, here's Zcash here, guys. If you go back and watch my videos from the last 4 years, we were talking about Zcash as low as $20. It's climbed all the way to $235, over 1,000% over the last year. And I'm not trying to sell you on false hopes on one particular coin. We look at this stuff macro market style. So, once you get past the top 25 coins, we're treading under $4 billion. I mean, when you think about how small these market cap coins are and the fact that they only have a finite supply of coins ever going to be in circulation, I mean, I don't know, guys. Where is capital rotation? Where are venture capitalists going to be putting their money? We've already seen a lot of venture capitalists open up their own meme tokens. For some, that didn't really work. For people buying SWE, a lot of people dug a little bit deeper and found that those tokenomics didn't really make a lot of sense, right? We looked at that. Who cares if SWE has the most liquidity if it's all wash orders and it's all venture capitalists or opening up various order books to unload their position? And we're going to do a video on SWE, guys. I mean, I hope you guys got it looking out. But we think in April, when that token unlock on SWE is going to happen, we think a lot of retail investors are going to get wrecked. Similarly to Monad and a lot of these things that you're hearing on CNBC. A lot of people that are watching CNBC, you'll hear SWE, you'll hear Monad, you'll hear those Solanas and all this stuff. But we really know from an investment standpoint that a lot of this stuff is garbage. So we're going to kind of expose that even more. All right, guys, I think that'll wrap it up for me here. We're looking at $2.4 trillion market cap. You guys got any comments, drop it in the chat, and we will catch you later. Take care, guys.